Because you're selling another mega cap.
No.
And this time you're out of Alphabet.
No, well,
Tell us. I mean, let's refresh everybody's memory, too. Remember, it was Meta a couple weeks ago, week and a half ago, and here we are. We're out of Alphabet. Talk to me.
Because I made a lot of money in it, right? I mean, I bought it last quarter when the stock fell about 10%. You guys remember that? We talked about it. And it was up 26% from the October lows. And so I just thought that the expectations were really high, and I much prefer Amazon, as you know, because I've been adding to that one as well. And so to me, with Alphabet, I don't think the quarter was terrible, but it was just kind of so-so. It was kind of like in line. Yep. Search and YouTube that actually missed the buy side numbers, and to me, the higher capex. I mean, when are you going to get your returns? I think that's been pushed out as a result. So I think cloud was great, right, up 26%. That was the highlight. But I just made my money, and I wanted to deploy it elsewhere.
I go to the question we asked at the very top of the program as to whether the market is too priced for perfection right now, Joe. You look at the gains that these stocks have had, most of the mega caps since November 1st. Now, you put Apple aside because it's only up 8.5% since November 1st. Microsoft near 20. Now, we're also taking into consideration the losses today among the group. Microsoft still up 19.5% since November 1st. Alphabet up 14.5%. Amazon up 17.5%. Nvidia up 50 in 3 months. Meta up 30.5%. Raises that issue, you could still beat, but if you're not great on these earnings reports, you're going to get punished. You may not get punished a ton, but you're going to get punished, and there's a good example of it with Alphabet.
Okay. Own the mega caps in an equally weighted nature. I'll continue to own the mega caps because I believe what we're about to experience will be a corrective pause that will refresh. Over the next 30 days, I think the NASDAQ will be, at best, sideways, and at worst will be down. I think the next 30 days, the market will be going down. That's what's in front of us. We had a similar setup last January. Market was up 6%. We followed up in February with down 2.6%. There's clearly been a high expectation that needed to be achieved for earnings, and I would say for mega caps, and really extrapolating that beyond mega caps into other sectors as well.
Well, just take look, AMD is not exactly what we would really put in the mega cap category, but it is in what some have suggested is the AI 5, and it is as well what Stacy Rasgon of Bernstein told me yesterday was the most expensive of the AI plays by far going into the number. And then you see what the results are. The stock was, combined with the regular session and the after hours yesterday after the number, down about 10%. It's pared the losses a bit. But nonetheless, when you're that expensive and you go into earnings, man, you better just knock the ball, not out of the park, like not over the fence, like out of the stadium.
Well, it's part of the AI universe, and it's a classic example of earnings that are satisfactory. Okay, in some examples, the earnings are better than satisfactory and poor price performance. And what I've learned over the last 30 years in doing this is that signals near-term exhaustion, and that signals that the market is crying for some form of corrective price relief. And I think you get that over the next 30 days.
I think Alphabet was average. I think Microsoft was stellar. I don't know what else you could ask for from Microsoft. And so the action it tells you, right? It may just be a pause. I would love to buy Microsoft down 10%, but I don't think it's going there because I think the fundamentals are so much better than an Alphabet. So I think you're going to see kind of like you're going to start to see winners and losers within the Mag 7, right?
100%. Look, it's the type of company, and the earnings were good enough that if it goes down 10%, I'm willing to take the ride with it.
Sure.
In the degree in which I own it, I'm comfortable doing that.
Goes to my price to perfection thing as you describe what was, good quarter from Microsoft, but here we are.
Yep.
Well, you own both of these, among 100%. The other mega caps too, but you do have Alphabet and Microsoft.
Yeah. So I think for me, to Steffi's point, I think as it relates to Google, the quarter was not bad. I mean, there was an advertising miss. It was a very slight miss, albeit. But it wasn't this unbelievable quarter, right? And we talk about price for perfection. We talk about the price action that we've seen since November. It had to have a great quarter for it to really explode to the upside, and obviously it didn't with a miss there. On the other hand, Microsoft was very strong. Azure was up 30% year over year. It was a very good quarter. And I think when we're looking at the CapEx cycle for AI, that's also the theme that I heard from these two players. All these companies are going to be spending money. It's just, where are they in the race? And I think Microsoft obviously has a strong lead.